Welcome to the 10 Mil Club Standard Portfolio Meeting for the third week of August 2026.
From Nashville,
It's a 10 Mil Club. It's a 10 Mil Club.
The 10 Mil Club is a group of individuals, informal group of individuals, who believe that if we could get to $10 million of net wealth, we'd have the financial security we want. The market this week saw the number of S&P 500 companies trading above their 200-day moving average to drop down just a little bit to about 69%. We had been as high as over 70% briefly. The number of S&P 500 companies that are above their 50-day moving average, however, took a bit more of a hit. We had been, again, over 70%. Now we're about 57.6%. which was a bit more of a hit, which kind of explains a lot of the difficulty we had in making our trades work out this week. The VIX, which we always check in on, had been in the 14s the last time we were here on a portfolio meeting. Now the VIX is more in the 15 range, still not elevated. 20 is kind of a rule of thumb area, at least one that Dave Keller likes to point out, and others. We're not in the 20 range, so we're okay there. The MOVE index, if I can find it, there we are. The MOVE index barely moved at all, which is interesting because the bond market, a lot of the headline right now is that the bond market, the back end of the yield curve is moving up, and the Treasury, not the Fed, but the Treasury is taking steps to try to buy those bonds and push yields down on the back end of the bond curve, which is signaling to the market that the government is actually beginning to lose control of the risk-free rate market, which has traditionally been the Treasury market. And if that becomes too severe, there are very bad implications. We do know that the United States debt is a problem. We could endlessly debate who's to blame, and we could pretty much more easily talk about how we got here, but the truth of the matter is how we're going to get out of it is going to be painful, and there isn't a lot that we can do that isn't going to be painful about it. So I don't necessarily know that this is the big one, so to speak. I do know we own some fixed income here that's just gotten punished over the last few days, and we're probably looking for some sort of semi-gracious out on that. In fact, we have quite a bit of money in some fixed income. A lot of it's not. It's like a variable rate fixed income, but some of it is actually hardcore fixed income, and so we're looking at that very hard. But that's the general market. We don't seem to have in the equities market and in the bond markets a lot of elevated volatility. We don't seem to have a whole lot of concern at the moment, which is interesting because elevated interest rates should drag on the stock market. So for right now, that's what we have. And with that, let's get to it.
It's the 10 Mil Club.
One of the things I've been playing around with this past week is a study. It's called the ATR trailing stop line. As it comes out of the box, at least in Thinkorswim, it has a 5-period. I'm going to apply here. It has a 5-period look back and uses 3.5 times the ATR. So you'll see that appear on a lot of things. I didn't have it in the intro because on these things like the VIX and the S&P, how many companies trade above the S&P 500 averages isn't there's no any use. But you'll see it appearing here, and kind of trying to start use it as a signal. So running through the portfolio and the things we're watching real fast, ABM, we actually still own and are up just a touch, 0.78%. The ABM, we are now below the 21-day moving average, but above the 50-day moving average. If we respect the 50-day moving average, we should be okay. So we're kind of keeping track of it, have a small up, just fine on ABM right now. ACT, we actually bought this week, and bought it as it moved back toward the 21-day moving average and took a turn. At the moment, we're down 0.57%. Have not owned it very long. So, we'll see what happens there. Own all these, just to let you know. On all of these, I'm a fundamentals person who is learning about technical analysis as fast as I can. All of us here are, some of us here are more into technical analysis than others, but I'm a fundamentals person. Everything we've done that we picked has some kind of fundamental that we can see into. And in some cases, we get the perfect fundamentals that we want. But in a lot of cases, what we have to do is just go, okay, I can kind of see what they're doing, even though maybe we don't like it. For example, I don't really care for share dilution. But if you never buy a stock that has share dilution, that's going to that's going to limit you a lot in the market. Anyway, ACT still doing okay. ANGO, we also bought this week, and we are down 0.19%. I believe we bought this on Friday, and just it closed a bit lower than we bought it. So new one on ANGO. BFH, we don't own yet, but we've had a return to the 50-day moving average. Some sort of, like you can see the turn here on Friday, some sort of respect of that and a continued move up, we'll probably buy BFH, which is Bread Financial Holdings. BNY, we have owned it for probably, I don't know, half a month at this point, and are still, we've been up, we've been down. Take my word, we've been around, but we bit of an homage to the late great Frank Beard there, who passed away this week. But BNY, we just we're down just ever so slight of a touch, but also bearing in mind that Friday was options expiration day. Things kind of get a little wonky there. We'll see what happens around the 21-day moving average. We are not big Bitcoin people, but I would be remiss if I didn't mention this. BTC and GBTC, like it, are Bitcoin ETFs. The lurch higher corresponds with the gold lurch higher that we're going to talk about here in just a minute too. It's a lot fast, and so we kind of expect it to either lighten up or tell us that it's completely going that direction. So we haven't bought into any of it yet. But the move into scarcity resources, scarcity materials. I guess Bitcoin's not really material. Anyway, scarcity asset. There you go. Scarcity assets. Gold and Bitcoin has been kind of striking as the back end of the yield curve has kind of begun to show some concern. Like we showed with the MOVE index, though, the bond market really isn't showing undue volatility as of yet. So this move in Bitcoin and the move in gold may be indicative of a coming move, but also the height of it may be a little bit short-lived. Just a guess. We are not great sages. I can tell you the future. CPB is Campbell's. Now, Campbell's, okay, their earnings and revenues have been declining slowly for a long time. If you want to look at CPB, Campbell's, and look at it, just here's a couple years of it, right? Down, right? But lately, what's happened, let's look at this on a weekly basis. Let's go with 2 years to the week. When in doubt, zoom out, remember. By the week, what we're seeing is a turn down here. These are, I can't really see it. Let's move that out of the way here. All right. Still kind of have trouble seeing it. But anyway, right down in here, you can see kind of indecisive but slightly down weeks. And then a few weeks of green, green, green. So whereas Campbell's, I mean, we don't own it yet. Whereas Campbell's may not yet be in perfect accumulation, we're starting to see, like, zoomed in, here's a year. You can see it above a couple of moving averages and headed toward its 200-day moving average, so we have it on the watch list. CPRT, Copart. Now, we've watched this briefly for a couple of years. I have a list called the waiting to come back list. It's a bunch of what I consider to be reasonably solid companies that have lost their growth, lost various aspects of their fundamentals, but look like for all the world they should come back. Just don't buy them today or this week or likely this month. Copart we've been watching for quite a time. Copart lurched here, formed a base, and then broke out of it. Now, here's our concern about Copart. The reason for that jump, that breakout right there, is because there is talk that Copart, it's, can't see it for me over there. I'll take me off for just a second. Right over here, market chatter. Copart in talks to acquire CCC Intelligent Solutions, which is an insurance company. Maybe they pull that off, maybe they don't. The news is that they are in talks to buy that, but they're up against several other private equity entities that might buy it too. That news fails, and Copart could throw back very quickly. So we haven't bought it because we're apprehensive about that move, but it is on our watch list for the week. DoorDash. We put some Fibonacci numbers on it here, from the high here to the low there. It retraced all the way to but not below the line of no return, and then back and over, and sure enough, it's headed up. We may actually buy DoorDash here in the next little bit just because of what it's doing. DCI, Donaldson, we own now. We are up 4.19%, which is nowhere near as much as we were up on it, and honestly, I need to get rid of those Fibonacci numbers, clean that up a little bit. So here's 6 months of Donaldson. Donaldson got a little extended here, has now come back. Our stop's down here. It's now turned in this general area, and we don't know the future of where a stock's going, but it remains. Now it's headed toward earnings here, and who knows, could get killed at earnings. We just don't know. But that turn there portends kind of a respect of the 50-day moving average. And so DCI may be one that we're going to do fine on. We will probably, you can see that our stop, like I was talking about the ATR trailing stop line, our stop is right at that line. So, I mean, interestingly, it didn't tell us that. That's just where we picked it. So we would, if stopped out at that line, we would actually make a small profit, though not the 4.19% that we currently make. DG, we got stopped out of Dollar General this week, and we put this on the Facebook page, and if I might just for a second, we have both a Facebook page and a Facebook group. I will, once this video is uploaded, I will put them below. Please give us a like on this video. It helps us on the algorithm. Please join our Facebook group. Please watch our Facebook page. Every day at the end of the market, we put what we did, what we thought about, and would appreciate your comments if you want to say something about it. So please let us know what you're thinking. We would love to know it. But the day we got stopped out on this, put it on the Facebook page, and it was a small gain. We bought it at 116.80. It had been up significantly more, and we got stopped out at 117.50. It just, I think it was sympathy pains. This isn't on the list, but this is Walmart, which has been in the news because Walmart just got destroyed on earnings right here. And something else that's interesting, Walmart got destroyed on earnings, and so did TJ Maxx, got destroyed on earnings. So there's just some uneasiness going on out there, which is funny because Walmart had positive same store sales. We think the same store sales, they just had slowed considerably. We think that Dollar General was in sympathy with that. We're going to keep watching it, but we'll see. Earnings are over here. We'll probably be out of it until earnings are over. Duolingo, DUOL. We have to watch Duolingo differently. Now, here's what's interesting. Having put the ATR trailing stop line in there, it flipped, which the ATR trailing stop line, which is what I'm playing around with these days, flips from an upside, an over the top short type cover line to an underneath long type short stop line when the stock price crosses above or below that. And right here, intriguingly, in May, now it's not fallible. Nothing is infallible. But in May, that flips and it sits on that ever since. Now, we've had a couple of successful trades. Actually, this was an unsuccessful trade. This was a successful trade on it, and it's because it just moves so much. So you really almost have to look at Duolingo. With us, it's on a 2-month, 1 hour basis. We're waiting for something that sits kind of down in this area and gives us a turn, because 145 is just a bit too high for us. So we haven't done that. We didn't take advantage of this one back here because that was seasoned with earnings, and that was a little too rich for us. So we just kind of let it go. We'll see what happens. So Duolingo is still on the list. EXLS, we probably will be buying this week because this is a rise off of earnings, a consolidation in a base, and then a breakout in a couple of days above. So we will probably be buying EXLS in the next few days. EZPW, now there is no news on that whatsoever. It's high volume and a big move in the candle. It probably had something to do with options expiration day. We'll see. My expectation, if I had to guess, would be that this will probably pull back Monday to something that's more reasonable, but their earnings were actually very good, and we may actually be buying back into EZPW soon. G, we're still watching. We have a very similar situation with Genpact. We have a rise, then a drawback. If you wanted to, we could actually play with Fibonacci numbers here on that, if you believe in such things. So this is a retracement to the 61.8% line, not all the way to the line of no return, which is the 38.2% line. A retracement to there. There's the 100, break above the 100. In theory, at least the way technical analysts believe, the next stop is somewhere around this 43.50 area. So we are kind of watching that closely and maybe buying Genpact this week. GGG, we actually own GGG and are up a paltry 1.5%, but we're grateful for it. It's kind of sitting on the 21-day moving average here. We're not in danger of any earnings. And so with GGG, we're kind of watching this base, we hope, right through this little area here. HCSG we're doing pretty well on. Now, this one, intriguingly, if you put the ATR trailing stop line on it, we actually bought it, and this is why these things are indicators, not hard triggers. We bought it down at this area after we'd seen a turn for a couple of days, because we had good success in the past with HCSG. And at the moment, we're up 5.96%. It still hasn't crossed that line yet and given an indicator, but we're doing okay with HCSG. So we expect that HCSG should go right on up and end up somewhere around this 2650 area if we had to guess. This is actually not... We're supposed to have HPQ on there, not HP. All right. HPQ, we only have on here because earnings are coming up on the 26th. Today is the 23rd. And we're just interested because we actually sold it at 28.91. It's been as high as 32. It's now at 29.71. Earnings are a couple days. We're going to keep an eye on it. IIIN, we probably will be buying. On Friday, we got a bounce off the 50-day moving average, and we're still in a buy zone right down at that stop line, which, again, is just an indicator for us. But we're on the 200-day moving average, above the 50-day, below the 200-day moving average, at the 50-day moving average. And so we may actually be buying in steel in the next little bit. All right, two gold stocks, KGC, Kinross, which is our favorite, and NEM, which is kind of the big boys' favorite. Bloomberg, Wall Street Journal, Barron's, Market Watch. Big jumps there. Once they took off, they really took off. And I would think that forceful of a move might actually be a little too much too fast. But anyway, we'll see. We actually haven't gone long that. It happened so much and so fast that we really didn't go long gold when that happened. We'll keep an eye on it. LMT, this was one of the disappointments of the week. We got stopped out of Lockheed Martin at 576.43. It wasn't a full 7. We haven't taken a full 7.5% loss lately. So 594.30. Sorry, 594.30 and 576.43. That was a 3.1% loss. So we're trying to keep our losses small lately. Between LMT and RTX, which is the other one we got stopped out, and we took a less than 7.5% loss on it too, but it was a loss. This probably is market noise, to be perfectly honest, but we can't risk it. We will watch it and pick it up, RTX and LMT. If they take a technical turn, Patriot missiles. We've been in the war with Iran so long that we actually there's a narrative out there that the stockpile of Patriot missiles is getting pretty thin and low, and they're the two main companies that make Patriot missiles. It could also be news that if the Democrats take the House, and the House controls the money, that's where the spending bills start and are approved initially. Democrats take the House, they won't be as friendly to defense spending, so there could be that too. At any rate, we got stopped out on both RTX and LMT. All right, MCD, McDonald's. Usually we don't put a lot of time into a stock that's gone down like this, except for this is what you call an ascending triangle. This is within a few cents, like 40 cents or so. That line right there is level, and this one is rising. And you can see the volume decline as we go across that triangle. So what we're waiting for is a break above that, where we would more than likely buy, because McDonald's, big name, not going for it. This sell-off here probably gives us quite a bit of opportunity. So we are waiting on this ascending triangle. You'll see us talk about McDonald's for the next several weeks, more than likely. MDT, which is Medtronic, we are down just a slight bit, but we only bought it a few days ago. So not going to talk about that one a whole heck of a lot. PAHC, this is Fibro Animal Health. That one has earnings soon. We are watching it on these moving averages right through here. The ATR trailing stop started rating it a buy. Only means so much to us, but we're going to watch it for these earnings and kind of see how it reacts. Not likely to buy it just outright soon. Paymentus Holdings, PAY, we actually bought, not this week, I believe it was no, I'm sorry, we did. It's on my list here. We bought it this week, which put us up 2.04% just from where we bought it. Small amount. It's still above the breakout line where we bought it. We're waiting for it to consolidate and to go on up. Volume is rising a little bit last few days. PCTY we don't own yet, but will likely, because the trend is continuing and we're above the 21-day moving average. We'll probably just have to buy it. Now, the one thing I don't like about this, I will say, is that get the right implement here. The volume's declining as we go. So back over here, your 14-day volume is like 1,000,001, 1,000,002. Over here, the 14-day volume is 700 to 500. So with the decline in volume, I don't know, we may chicken out and not pull the trigger on that one. So it's not moving up with volume for us as much. Also, if you look at the RSI, that is overbought on that trend high, on that swing high, overbought on that swing high, slightly overbought on that swing high, and then suddenly we don't. And each has had kind of a decreasing sort of power on the swing high. So we may need to just kind of hang on and wait on PCTY. PRGS, which is Progress Software, we may buy into this above the 21-day moving average. It's just sitting above the 21-day moving average. We may end up buying into this. Our RSI is 63. Got a good strong trend moving. ROST, ROST. Now this, unlike TJX and Walmart, this had earnings that were actually pretty good, raised their guidance, and that day wasn't so great, and then the next day was a bit of an odd bounce. But this, we may actually be buying ROST because it seems to stack up for us pretty good. RRC, which is Range Resources, we are now up 4%. It is just very slowly doing this above the 21-day moving average. It'll pull back the 21-day moving average and threaten us. Sometimes we'll even be a little bit down, and then up we go again. But RRC, we seem to be doing okay for the moment. Did not check in on the S&P 500. This is the S&P 500. Our select one is SPYM. This is the consolidation pattern, and then this is the breakout. This is back down. We'll find out if this is a test or a failed breakout soon. It really, so over this way, let's see, 7 million shares, 10 million shares, then back this way, 9 million, 10 million, a little hard to tell. We don't really have a huge amount of volume confirming the breakout, so we'll see. TFSL, we actually sold at a small loss, and it let's see, we sold it at 1730. It's now 1764, but still it's not really doing a whole lot. It's below the 21-day moving average, and it's kind of suffering, so we'll see what happens. And that brings us to everyone's favorite TMC, the metals company. Now, just so you know, we only cover this stock because it's our mascot stock. We are the 10 mil club, TMC, and it's TMC, the metals company, TMC. So we only cover this. The spike on Friday on options expiration day. Let's just see what kind of options. Yeah, you can pick up not just options, but weeklies. So TMC, the metals company, apparently is options liquid enough for it to not only have, I mean, look, so here's January 2028. Look at all this open interest. 10,000 contracts at 5. Here's the thing about this stock. I know that lurched, but all right. I looked into this before we got on the show here. TMC, the metals company, has recently bought some royalty rights in some iron mine properties in the Mesabi Range in Minnesota. I think part of this decline at earnings right here was probably some disappointment in the fact that they had still no revenue whatsoever. But they announced on, I believe it was Friday, that they've gotten the financing to buy another 1% royalty. And in so doing, they also raised the amount of equity that they are selling to the company that's helping them finance this. And a lot of it is actually convertible debt, which means that they'll be able to convert those bonds into shares. And they're also giving them quite a lot of warrants. So one thing you need to know about TMC, the metals company, with their complete lack of revenue as of yet, though they'll have some soon because they will end up owning the royalty rights. One thing you need to know is that they are getting their money from anywhere they can get it, and they are not yet returning value to you, the shareholder. They will have lurches like this, but as of yet, it's not a consistent way to try to invest and gain. It's hard to read. It's hard to guess. I mean, by their very actions. I mean, they're not trying to gouge you necessarily. It's just what a mining company has to do. A mining company simply has to get its money from where it can get it. And as long as people keep buying the shares in large chunks or small chunks, they'll keep selling them and keep going. So the other thing that they did was this, there was this news, I'll just pull it up here. So look at it. I know you can't see that on the show. It says shares of critical metal companies are trading higher, possibly after the Department of Energy recently selected 7 projects to expand critical mineral processing. I went and looked. Provided I'm right, which I think I am, none of those 7 projects belong to TMC, the metals company. None of them. So I don't know, maybe there's a halo effect of, oh, well, the Department of Energy will select more, and maybe one of them will be TMC, the metals company. I don't know. Whatever happened, this was options expiration day, and if the stock opens back down on Monday or falls during the week, it probably was options related, though there is a little bit of news on TMC, the metals company. But we only keep this one because it's our mascot stock. And the funny thing is, a huge amount of our views come because we watch this one stock. Probably we'll do a like a penny stock spotlight on this and move it off the show eventually once I get a minute. TOST, we are probably going to buy this week because the momentum's in place. We're above the 21-day moving average. All the signs are there. We will probably buy TOST. TTEK is another one that's the same way. TTEK. Probably buy it this week. Everything's in place. When we ran what our stop would be, it was pretty close to the 21-day moving average, and we would be able to stomach a few days of holding on and waiting. Still have WLY on the list, and it's still moving up. I think a lot of this has to do, did a little bit of research this week. This has to do with John Wiley & Sons, the book publisher. They're actually using AI. They're training large language models, and that is something that the market really loves. They're also getting paid to do that. So there's a narrative there that they're probably going to have a lot more revenue in the future. Problem is, it looks like their earnings are coming up in early September. We're already getting out into late August, so we'll see how that one goes. YETI, the market did not like YETI's earnings, YETI. The market did not like their earnings. However, I liked their earnings. I like their fundamentals. And so despite all of this tanking to the 200-day moving average, you can see the market fighting it out right here at the 200-day moving average. If YETI begins to move back up, despite what these things say, we may take a chance. Buy into YETI. YUM China Holdings, YUMC. If you heard, YUM Americas actually sold off Pizza Hut, and they sold it to a private equity entity which turned around and sold the Pizza Hut locations in China to YUM China Holdings, which is actually a separate company. And YUM China Holdings is doing a lot of things to expand over there. So their stock is actually kind of in accumulation mode. Let's go look at it a year by the week. So we'll go 2 years by the week. All right. So here you are, up. Then you've got on the earnings week here, then a bit of a consolidation, then another up. So technicals lining up. This looks like something where might actually be able to get a pretty good lift out of YUMC. And then finally, we bought this week, ZBH, Zimmer Biomet Holdings. We are actually up 0.23% because I believe we only bought it on Friday. And that basically, those are the stocks we're going to ride with. Now, you may hear us, if you pay attention to the Facebook page and group, stocks do come up that were not on the show over the weekend. And we have found that it really doesn't make a whole lot of difference that you get it after the market closes on the day that we did it, because in some cases we're up, in some cases we're down, and usually it's fairly paltry. So the decisions we make, we really aren't trying to make a ton of them. The only one I can think of that we really make in small spaces is Duolingo, DUOL, because that one needs to be bought within just an hour or two, one way or the other. If I can remember, I'll try to put it on the Facebook page. So that's what we're going to, but those are the things that we're going to ride with this week. And that is what we think of it. We'd like to thank the 10 Mil Club singers, Sophie, Hannah, and Presley, and our announcer, Jackson. And from all of us here at the 10 Mil Club, we will see you next time on the